Friends, in this video, I'm going to talk to you on the topic, the missed opportunity in debt markets. This budget was clearly a great chance for the government to make more Indians participate in the debt market. They should have expanded the debt market, brought in more people and incentivized deepening and broadening of the debt market. Remember, this has been a mission which has not taken off for nearly 20 years. So, whatever government, regulation, industry may say, this has not been a space where we have actually achieved much. Where people have raised large sums of money in the debt market, there have been only troubles. Example of DHFL is a classic, and there are others as well. So, there was an opportunity for the government in this budget to rationalize taxes on debt investing, incentivize people to participate in the debt market, make the markets broader and deeper, and remove any tax-induced biases which were working against debt investing. What the government has done is, it has brought taxation in debt mutual funds on par with the taxation in fixed deposits. Now, my view is that it should have done the opposite. Instead, the government has chosen to be very harsh on people who are lending their capital for the growth of the economy. The argument being put forth by a lot of intellectuals or economic intellectuals is that this is lazy money, it belongs to the rich. What we fail to understand is that this money is being lent for economic growth in an economy where such money constantly loses value. A debt investor is always fighting inflation and most of the time losing in real terms. Now, assume you are making 8%. The inflation which government gives you may be 5 or 6 or 7 or whatever. But in real terms, your money is constantly losing value. On the other hand, the equity investor is actually beating inflation if he does sensible investing. So, the equation is heavily tilted in favor of equity investors, and it's always stacked against the person who is giving money to a bank or to the economy through a debt fund. What the government should have done in all fairness is they should have incentivized, or they should have done something to take cognizance of the fact that people in the debt markets are also taking risks for economic growth. Instead, we are still keeping the equity investor in a very sweet spot and treating the debt investor even more shabbily. I think this treatment comes out of a lack of understanding of where we need to find capital for our economic growth. This is typical of setting a revenue target and then seeing where you can tinker to get money out of. A very unhealthy approach, because it does not do anything good for the long term. The official suggesting this will get kudos from the minister, and the minister will in turn show good collections, but it won't help the economy. I think better sense should prevail, and I am hopeful that we will take a more nuanced view of this. Try and deepen the debt market by keeping debt taxation simpler, by making it more friendly towards those who are giving their capital to both banks and to the economy through mutual funds. Incentivize them for the risk they are taking against inflation, and make sure that the taxation is fair and equitable to them. Ideally, this should have been done 10 years ago, but it's not been done till today, because we still think that somebody who is giving money to a bank as cheap capital is actually being done a favor, whereas in reality, it's the opposite, because today the investment avenues available to people is far wider, and they don't need to lend money either to the government or to banks or invest in mutual funds. I think that we are taking the investor for granted here, whether he is doing fixed deposit or debt funds or just savings products of the government. A responsive government should respect the investor all the more, given that he has been very patient even at the times when the economic Circumstances were stacked against him, his money was losing value, and inflation was thrust on him, mainly due to reasons which are directly attributable to the government. So, this is something which has been our history in the last 2 decades. I think we are not really recognizing the rights of the investor and what can make the investor trust the economy more and give more capital to the economy. We seem to be taking the investor for granted right here. Thank you for watching this video.